Hello traders, the title of the video is how to avoid day and swing trading blindly. One more time. So I've been talking about this for some time. As a day trader, you don't want to day trade blindly. As a swing trader, you don't want to swing trade blindly. So one more time, how do you avoid day and swing trading blindly? So you may be wondering, George, all right, what do you mean by day or swing trading blindly, all right? So if there are some trading opportunity, whether day or swing trading that occur, and you'll be wondering, at the end of the day, you'll be wondering why this one was so successful. So you enter the trade, you do everything okay, and then you get paid. Prime move, blah, 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 everybody's happy. Which means you were not the only person buying that time before the price went up. So a lot of professional traders, a lot of smart investors, saw the same thing, and they all together, 70% of the market participants are doing the same thing, and they push the price to one place. I think it will be good for traders to know where are those levels where they can identify the best day or swing trading opportunity. This is a very interesting chart, and I'll be looking at it and I say, wow, look at this. This is Home Depot. Home Depot Incorporated is an American stock that belongs to the consumer cyclical sector. And it's all mapped out here. This is what I'm talking about. Day and swing traders who were trading here were not blind at all. They were just trading correctly. So everything starts with the target. So this is what we say to trading. You want to build your own trading strategy, you want to build your own trading system, you must base your trading system on a principle or market stable data or a market truth. Otherwise, your system may work today and tomorrow you become something else. The price does not go out for no reason. It's always headed to a specific target level. This is one example of market principle. Here the market plays beautifully. So with that, you see that round bottom. See the price turn around. See here? Went down and returned back to the starting point. That pink line, that's what we call the neckline. Right? Traders measure the width, they project it up. Here is the target, the red line there. They will also put a midpoint target. This is amazing, beautiful chart, man. Very beautiful. So this is my measuring stick to show you the midpoint somewhere there, and that midpoint target is there. Midpoint target. Am I correct? Okay. Is it correct or not? No, that's not the one. Okay. Somewhere in that zone, okay. Yeah, somewhere in that zone. That's the midpoint target there. Let's color it now into green, all right? You see that tail? This is what the market is doing all the time. They push it from the top all the way to return that midpoint target. After I brace the bovie, they say, guy, where are you going with it? They are running away. They say, did you retest it, that midpoint target, before you go away? So somebody get a little bit upset and push it down to retest it before. Or was he those crash, the flash crash? Okay, you see them? You retest the midpoint target and then bounce up again. But I haven't finished yet. So as a swing trader, those are the zone where you want to look for your trading setup. The target and the midpoint target zone. They pull back in an uptrend and they rally in a downtrend. That's it. With that, you are not trading blindly. But what is happening, people are taking, so we talk about high probability trading setup, people are looking for it everywhere. They happen at a hotspot trading zone, they happen at the target level, they happen at the midpoint target. Those are the points. Because the smart money know where the target is. So the fundamental traders do know also about price targets. All right, hedge fund use price targets. All right, they want to know. So they are buying. They say, where is it likely to go? Everybody know. Without a target, they can manage the trade. So the risk and reward. So position trader taking profit, placing a trade with millions of dollars, want to know where they're going to get paid, where is the target, so they can determine how much risk they are willing to take. So without knowing the target, how people are going to manage the trade and set their profit target carefully, as a swing trader, you are into the trade. Why are you using 50 pip? Why are you using 80 pip? If somebody asks you that question, why are you using 100 pip? You may turn around and say, the target is at 300, that's why I'm happy to use 100. I would say, oh, you always use 50 pip for your swing trade. Why are you using for this 100 pip? Oh, you say, oh, because of the volatility in this financial instrument, it runs very fast. If I use 50, they will take me out before I even, wink, something like that. Therefore, to secure my position. So it's all about the target. Target, risk, reward, target, risk, reward. So the target is about the profit, right? It will determine how much you are risking. So a swing trader who is not incorporating the target trading is trading blindly. So if you are using the TSTWS, whereas use your head, use it in conjunction with the price target, the midpoint target. All right? As you can see here, if you understood that, suppose you understood, you knew this before, where will you be looking for trades? Above the neckline here, you'll be interested in that. You'll also be interested that, they ran away with you, you'll be wondering, wow. So you'll be saying, they ran away, I was thinking for them to pull it back. So you'll be saying, what's going on? But sometimes you can just place order there to buy. So you can just place order here, say, I want to buy here. So they're running away with you, say, just place order. Some people do that. They are very good at it. They place it there. They set their stop loss. And I go, order fill, boom, bye-bye. Sometimes it may not fill the order. If it doesn't fill, you have to remember to cancel that order, because if one of the price come back to that zone, that order will be filled. So when you're setting a limit order, you remember if the order is not filled, you come back and cancel it. Otherwise, one day you open your account and say, I didn't place this trade, I didn't place this trade, I didn't place this trade. You did, you forgot. It was a limit order that you forgot to cancel. Now the order is filled. Now, it happened to me one time when I was a new trader. One time I opened my account, I saw, but it was in a good way because it was a profitable. So I saw my account, this trade was there, profitable. I said, what's this coming from? What's this coming from? You see? Now, so if you are thinking that you are the only one that was struggling when you were a new trader, you are not. Okay, now you see it. But it can be also a losing trade. So you open the account and say, oh, what is losing trade? You call your broker and say, I didn't open this trade. They say, yes, you did. You say, when? It's 5 days ago. You place the limit order, you forget to cancel it. So the point I'm making is that as a swing trader, you want to know where you should look for your trades. So this is the target here again. So you'll be watching here again. It was there, you see, from a double bottom. But it can be messy. So it doesn't mean that because you know where you happen, so all you need to polish is how to use a different time frame trading method to control the risk and handle it gently. Sometimes they may take you out. Sometimes you may have to come back. Like this one was volatile here. Some swing trader may be taken out. They'll blink, and come back again. Maybe another opportunity turn up, and then they get paid later. All right? But they know that there will be some people waiting here also. And then again, price goes above, they project that mention stick again. So where are you looking? You are looking for swing trading opportunity here to bring it to the midpoint target. Look at that. You brace the ball, the midpoint target again, and retest it. Look, this is how they trade this Home Depot from... Can we say from from here, 2013? And look again. He breaks above that target. And again, rendezvous, meeting point again. And they took it up again. Amazing. Isn't it amazing, this one? It's amazing. All right? It's happening all over the place. So the takeaway for this tutorial is just how to avoid day or swing trading, okay, blindly one more time. So you may say to me, Joy, I'm a day trader, you are on a monthly chart. You can apply the same strategy. You go to the 4-hour time frame, you set the target like that, or you go to the daily chart, you set all these targets, you place all those lines, target number 1, midpoint target number 1, target number 2, midpoint target number 2, target number 3, midpoint target number 3, and you are just watching for trading setup around those zones. So you can do that on the 4-hour time frame and then go to the 15-minute time frame. So those of you, for instance, you are looking for overshoot, overbought, stochastic, you can look for them around those zones. So you are connecting your 4-hour time frame to your 15-minute time frame, or at least your 2-hour time frame to your 15-minute time frame. And then when you are about to enter the trade, just go on the 3-minute time frame to intelligently. So you want to catch the lion's share of the price move. So you can see that the price from here, they are taking it. They are taking it. They want to bring it to the midpoint. And then when it goes to the midpoint, they want to bring it there. The price does not go out for no reason, especially if the market is trending. So if a trend is in place, if the market is bullish target should be the aim. If the market is bearish target will be the aim. But we want to know the station, the places where we can enter the trade safely as a swing trader and also as a day trader. A day trader can go to the daily chart, do exactly what we do now, all right, and then drop down to the hourly time frame, and then break it down again to the 10-minute time frame. Though I'm using a monthly chart is excellent time frame for swing trading, all right. You see how they map it out? So now this is the target. Look for the price this stop. You think it just happened like that? Look where they stop it. And see the projection carefully. Look at the projection again, all right? So when it goes above, we project it now like this, 1. They count it here. They always count it. They say 1, 2. When we reach the third one, they are careful. This was happening to you very often. You see that 1 projection, 2nd projection, 3rd projection. Careful at the 3rd one. Here it is. Target. It's all mapped out, yes or no? All mapped out. So the video that I'm recording now, talking about how to avoid a day and swing trading blindly one more time, is also has something to do with a video that I recorded today that is titled, "What are the most powerful trend line that a swing trader, cannot ignore?" All right, check it out at the 24 Stock Trader YouTube channel. So this will conclude our discussion today about how to avoid day and swing trading blindly one more time. You want to keep your eye wide open, all right, without blinking as a day or swing trader, looking for trading opportunity at a price target level or midpoint price target level, okay. And then when you see a trading setup, you want to break it down using a different time frame trading method. So this will conclude our discussion today about how to avoid day and swing trading blindly one more time. If you have any question or suggestion, please put in the comment section. In due course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. If you think it's an essential tutorial that can help other swing traders or day traders, do not hesitate, because sometimes YouTube does not advertise the video very much because they have many choices. Okay, if you are sharing it, you are spreading the seed or the message that if I like a video, I like it, all right. Connect your YouTube account with your Twitter account. So when you do that, if you connect your YouTube account with your Twitter account, all right, anytime you like a video, it will show in your Twitter feed. So anytime I like a video, if you see my Twitter feed, it will be there. So by liking it, if you connect your YouTube account with your Twitter account, and you allow YouTube and the Twitter to communicate together, it will quickly share it also on Twitter. All right. So feel free to share it on Twitter, Facebook, Tumblr, and Google+. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. And be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Now we are live streaming videos, and you can ask me questions during the live streaming video time. All right, if I'm there, that's a very good thing. So make sure you click on the bell. Okay. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders talking about how to avoid day and swing trading blindly. One more time. Thank you for watching.